In this video, we're going to look at what an income statement is and break down the different components. And what better way of doing that than actually looking at Apple's financials? So this is the recent financials that were disclosed from Apple for the quarter ended March 30th, 2024. So you can see that here. And typically, on a quarterly report, they do two things. They look at the quarter for the current period, which is this. They compare it to the previous quarter from last year to kind of show what's going on with any trends and whatever. And then they do the same with the year-to-date period. So this is their second quarter. So it looks at the 6 months ended the March 30th, 2024. And they compare that to the same period of the previous year. So what you can see here is, let's have a look at for Apple. So here's the revenue, or they call it net sales. And they break it down into two components, products and services. And you can see here, so obviously the year-over-year view of products is that it's declining. Last year it was 73.9 and now it's 66.8. And then on the services side, that's actually increasing. So, and interestingly enough, we'll look at what that means for their actual financial position in a second. So all in all, then they sum up those to show, total revenue has declined from 94.8 in the same period last year to 90.7, 90.8 in the current period. So that's revenue, or net sales as Apple discloses it. So the next component on the income statement is cost of sales, or cost of goods sold. So this is basically direct expenditures. So think about this for products. So what does products make up? In sales of products, it's iPads, it's iPhones, it's Macs, any sort of hardware that they've sold. Well, to make that actual hardware, the components that go into that, that's the direct cost, and that is reflected here in these costs here. So you can see, related to just products, they spent $42.4 billion on the components and everything that goes into those products. And then on the services side, what would that be? That would be things like, they have to, for Apple Music, they have to pay royalties. For the Apple TV shows, they have to actually pay production costs and that sort of stuff. For your iCloud storage, they have to pay for cloud storage for another provider or whatever it might be. And so you can see the cost of those services are there as well. That gets you to a total cost of services and a total gross margin. Now, what I do is actually, as I'm looking at this sort of stuff, I would look at what is the gross margin, so revenue minus the cost, but for each individual line item. So what's the gross margin on products? Well, it's the 66.9 minus the 42.4. That comes out to about $24.5 billion of gross margin just for the products. So on, after they've paid their direct expenses on iPhones, Macs, and that sort of stuff, they've made $24.5 billion at a 36.5% margin. So that would be the gross margin, which is revenue minus the cost of sales divided by the revenue. So it gives you a percentage of the revenue that you're making on that. So on products, they make 36.5%. Interestingly enough, you can see the difference here. On services, they make a lot more. So 23.9 million of revenue from the services and 6.1 million of cost. So that means that they're making gross margin from the services of $17.8 billion. Which is actually a 74.6% margin. So over double what they're making on products. And so I would look at that sort of stuff as well, and to show, and then compare to other periods, are they, are those gross margins by product or gross margin for services, are they declining, are they increasing over time, to see what the trend line is. But that gets you to total gross margin, or gross profit as it's sometimes called. So what do we have after gross profit? Well, we have operating expenses, and that is, normally most companies would give you a little bit more detail than Apple does, but they only break it down into two components. They break it down into research and development, and that is really purely like, them spending on new technology and research into, new products and that sort of stuff. And then selling, general, and administrative. So that would be everything else. So that would be the amount that they pay for rent, the amount that they pay for utilities for running that building and their data centers and whatever else, and all of the senior management overhead and everything else. Marketing is in there, sales is in there. Like, so there's so much stuff in there. Normally this component would be broken down much more than it is here, but that's the way that Apple does it. And that gets you to a total operating expenses. So operating income is basically then gross margin minus your operating expenses gives you operating income. And sometimes this is called EBIT, EBIT, or earnings before interest and tax. And so if you then go through their statements, you can get to EBITDA by adding back depreciation and amortization. Very simple way to do it. It's not perfect, but it's a good proxy for getting to EBITDA. In another video, I'm going to actually explain how to look at EBITDA and how to calculate it. But it's obviously a common metric that a lot of folks are looking at. And then you've got other income and expense. This might be interest income. So they've got big cash balances on their balance sheet. So they make income from that. They might have some debt and everything. So they pay interest on the debt. So this is basically non-operating income. It's a very small number, obviously. And then that gets you to income before provision for income taxes, or profit before tax. So basically, that's the amount of money that you have before you have to pay the tax man. They deduct provision for income taxes, and then they get to net income, which is the final kind of line item on an income statement. Then what they're doing is, you often see things like a mention of a price earnings ratio or a PE ratio. They're doing that based on earnings per share, or EPS. And so the simple calculation there is just to take net income and divide it by the number of shares outstanding. That's the total shares that are out there for Apple. And that gets you to $1.53 per share on a basic basis, and $1.53 on a diluted basis. Not much difference between the two for Apple here. This is the number, so $1.53, that is compared to their share price to get you a PE ratio. So the share price divided by this 153 would get you a PE ratio. And so that's pretty much it. That's the official stuff on an income statement. I'm just going to go through some other stuff that Apple reports just to kind of show you the level of reporting that you do get from some public companies. So what Apple does is then they break it down by region. So you can see how much is coming from the Americas, how much is coming from Europe, how much is coming from China, Japan, and then rest of Asia Pacific. So you can kind of just tally it up on a geographic basis. And they also do it by category as well. So you can see on the hardware side of stuff, they're breaking it down by iPhone, which is clearly their biggest line item on a revenue side. And then they have Mac, then they have iPad, wearables, home, and accessories, and then their services, which was shown above. And that gets you, again, to that same total sales basis. So hopefully this helps just kind of break down what an income statement looks like. It's a pretty basic income statement, so from Apple, with not a ton of detail, especially on the operating expense side or below operating income, but I think it's a good summary of how an income statement works and the different components. If there's any questions, definitely leave them in the comments below.